Hey guys, how are you? It's Francis here. Just made an appearance on IG Index regarding the cryptos and how it's all going. We'll tweet that out later when I get the video. So what have we had? We've had a 20 to 25% sell-off, and subsequent to that we've had deep hammering and we've hammered back up, and in fact it's moving back up. So it looks like a 15 to 20% dip, with a rally now coming back into fall. Now I just want to say didn't feel that this was like a 30% type crash and a major, or even worse, a mega crash, essentially. But there was an element of it that was concerning me slightly, and we are going to rally, but we won't necessarily go straight into new highs. So the point I'm going to make as I jump off this train is be careful out there. This rally, I think, is going to stop short of going new high, and then it'll have another down leg. After that down leg, I don't think it'll make a new low on that down leg. I think the volatility is going to start ironing out. So we'll fail to make a higher high, but we'll also fail to make a lower low on the next down leg, which could then set up continuation. So always, I suspect continuation is the underlying force, generally, as the probability notion. That means longer run will be going back up and higher. You've got to time your entries though. Entries matter. You buying this low one, where it was really deep, is possibly potentially a dangerous thing to have done, because we could have been in a deeper crash that could have just followed. Now that we've had, if you look at it on a daily or 4-hourly chart, you've got proper hammering that has taken place. You can assume that the crash element risk has abated somewhat, and it's now, will everyone go back to bull and jump back in, etc. I'm not sure we're ready for those new highs, so my suspicion is we won't make a higher high, but following that, what we will do probably is we're going to make a marginally lower high, and then we'll sell off again. So this is all part of volatility dissipating, and usually it happens in 3 cycles. So first it's the parabolic melt up. It's human emotions at play. This is what we're charting. It's less about the underlying coin, and it's more about human nature and human emotions. Exhaustive up move, and then after that exhaustive up move, you get a panic and an overreaction to the downside. Then the second time round, more moderated, and you then also on the down leg more moderated, and the volatility dissipates. By the time you get to the third iteration of a rally up, it's far calmer, and typically the down leg on will be even calmer still, if that occurs. And I'm not saying it has to occur. This is just always our probability assumption, continuation. If you're getting that third impulse, that's when I think I'll be prepared to get long. By the way, it's going to end up higher up in the event that that occurs than if you'd bought the relative low one of this exhausted trade down. But I'm not in that game. Why? If you're being active and you're not doing the hodl strategy, if you're being active, you've got to be defensive when there's the higher level of risk. And for me, I don't even want to get the relative low 2 just yet. We're going to have to see how it plays out. So I'm treating it with quite caution. I've got a big sum involved, and I'll wait for relative low 3. And if that's nice and symmetrical as a setup, I'll be getting ready to go back long. So that's my update for you. Keep an eye out for the tweet and my opinion on everything, summarizing this with IG Index, the largest UK spread better. It's just a small segment, and I look forward to updating you again soon. And trade small, trade safe, let the volatility dissipate, let the headlines just dissipate again, and fall off the mainstream media's radar again, because they've all got very excited about this sell-off, and once that's happened, I think we can set up for the next leg up. And Ethereum versus Bitcoin, I'm still biased to the Ethereum over the Bitcoin on that trade.